6 hours. 6 bloody hours. BlackRock, Binance, Coinbase moved over 1.1 billion in Bitcoin in 6 hours. Selling pressure is intense. The institutions offloaded it, but here's the twist. It wasn't panic selling. It was strategic. And ETF redemptions mount as tariffs rattle the markets. Bitcoin is testing a huge critical psychological level at 100,000. The next question really is this going to be the flush before the next leg higher, or are we into a deeper correction? Let's break it all down for you. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in crypto and Bitcoin action. Make sure you give us a like. Make sure you hit subscribe if you have not already. And of course, make sure you come on over to where? X, and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're crypto maniacs. All right, let's get right into it. All right, let's get on to our famous 2 hour chart. But before anything, we got to talk about like what's going on here. All right, and there's actually, it's not rumor. BlackRock, Binance, Coinbase moved over 1.1 billion in Bitcoin within 6 hours. Now, the quote of the day was, the clients are selling, not the exchanges, which is the most important thing. So it's a portfolio rotation, it's not capitulation. So after record ETF inflows in Q3, the large players are locking in profits and resetting exposure near the resistance levels that we got right now. Okay, so short-term pressure for sure, short-term pressure. Long-term structure is still intact as long as we hold above 70,000. Okay. Now, we're down, but if you really look at Bitcoin itself, it's trading between 100 and the new high of 126. Now, we've said before, Bitcoin has a normal, it can have a $35,000 delta. I was hoping that it was getting a little bit tighter. I was hoping that Bitcoin could actually start to reduce that delta, because once you start reducing the delta, it becomes a very viable trading instrument for, you're talking about corporates, and you could actually invest in it and not have to worry about so much about the volatility, because look, people are interested in, of course, high beta. They want to make money, but also they don't like the risk associated with it. All right, so it's just what people are. I mean, they just want all positive and don't want any negative. And like, if you're into trading and you just got into this, you got to understand, this is not a game. There are billions at stake every day. Okay, so just don't think that you can invest in things and not have any adversity. Okay, it just doesn't work that way. The market makers will let you in this marketplace not because it's easy, but because it's hard, and they know that 90% of you are going to lose your money. That's just the way it goes. That's why all you have to do is sign a little paper or open up a Coinbase account, show your license, and you're in business, right? This business is the biggest casino in the world, man, at times. All right. So you really need to be on your toes with it. Okay. That's all I'm going to say about that. But right now, if we look overall, all right, we're going to see knee-jerk volatility. That's for sure. We talked about this in a previous video. We said, look at the options, look how they're spread out over the board. Big players know that there's going to be volatility. Now, if we have equities that are selling, they're going to spill over into crypto. So right now we are in a bit of a really tight spot in Bitcoin, right? We are. So we're going to go over the specific points, but just buckle down. Like we are, like I said, get into our pro trading group. We'll help you out with this. Don't go this alone. A problem shared is a problem halved. We could help you out through it. Okay. Now, as we just said, I'm going to state it again. We're going to expect knee-jerk volatility. And you got to look at the equities. I told you, I pointed to the equities last week looking for contagion. The equities are mixed. Okay. There are some that are up, some that are down. So it's not a complete all meltdown. But if we see more selling in equities, it's going to spill over into the whole crypto market. Okay. So what we're seeing isn't just crypto specific, it's part of a broader risk off wave hitting every risk asset on the board right now. So where are they running to? They're running to gold, and I'm gonna go over gold later on. It's Saturday, right? It's 10 o'clock a.m. Eastern Standard Time. Just get a coffee. We're gonna take you through this. We're gonna go through the short term points right now. Now, we're looking at this 2 hour chart, and if you think about the chart points I gave you, look at this. I told you resistance was 107, 574. And we needed to overcome that, and then we needed to get over the 108. Okay. We have not. All right. Market is basically consolidating and coiling in this area. All right. Now, here's the thing with this. Okay. It's the weekend. I don't really expect much to happen. But the point that you have to watch right now is the 106 level itself. Now, like right down here, 106.1, 106,000. Okay, I'm going to put that right here. Okay, let's put up a horizontal ray right there. Okay, this point is a very, very important point right now. Why? Well, it's basically the support point to prevent the market from retracing back down deeper, okay, and actually taking out this bottom. If we take out this bottom, we're going to be in for some greater volatility, the test of 100,000, and potentially even going down, yes, into that 95,000 CME, 97,500 CME market cap. Okay. I'm thinking, well, I'm not going to make any type of crazy, crazy statement like, oh, it's going to hold and it's going to rebound from there. If I knew that for sure, I'd be loading up. But I'm going to tell you right now where you have to be really cautious right now is right at this 106,000. Okay. That right now is the main support. Now, there are two sides to this. Okay, if we drop down below this, it's not the end of the world. It's not great. Okay, it means that we're going to get deeper consolidation. As long as we do not break this low, okay, as long as we don't break this low, we could come down like right here. We could actually trade down lower as long as it makes a slightly higher bottom and kind of recovers and then trades in between these 2 points and eventually breaks up. Then we have seeing that potentially we have marked a new bottom, and that would actually start to give a reprieve rally and the marketplace can recover. Until then, we're just going to be in for volatility and a potential breakdown. So these are the important points. Let me just get rid of all this stuff so it doesn't confuse you, and we'll go through it step by step. Most important point right now to hold is 106,000. Okay. Can it dip back below this? Yes. Is it the end of the world if it does? No. If it comes down and creates a higher bottom and then comes back up, good sign that we potentially have found the short-term bottom and we could actually start to recover from there. If we break through that 103, not good. Not good. Could potentially drift even lower. So your main important points right now are your 106 to hold. If it drops, got to watch that bottom at 103.5. Got to hold that. Or if we could get a quiet weekend and then finally a break above 107.5, 108, and then we could start trading up where we start use the 107.5 as a support, and then Bitcoin is beginning to start to recover. Now, the 100,000 we could say is like the line in the sand, and the 96,000 becomes the magnet. Now, I'm going to take you over. I'm going to show you there's a double top that's confirmed right now, and not good for bullish sentiment right now. So we got a potential double top loading right now. Bitcoin right now is sitting right around 107,000. It went up to the resistance level that I had at 107.5 and went to 107.473. Popped back down to a low to around the 104.700. Okay. Now, a double top is kind of loading right now. If we lose 106,000 on the weekly, okay, we're thinking the floodgate's going to open and the target's going to be around 93, 90,000, before we actually get any type of reset. Now, This point, this level, I'm going to say it's not even really the 106. I'm going to say it's the 103. All right, I'm going to give it a little bit deeper of a retrace, give it to 103. If we lose that, we're opening up the floodgates. So this is make or break for the bulls. They need to hold the line at this 103. They need to create a higher bottom from here, get us back above 107 and 108 and a half. That would be a good sign. Okay, but until then, we are a little. We're up the gum tree right now. We are up the gum tree. If we look at Bitcoin itself, we have there's a lot of pressure on this asset. Okay, you got Bitcoin that made new highs, but you got RSI that didn't. So it's called bearish divergence. And it's there. And the last time this ended, it ended in a disaster. And yeah, I guess I'll be taking those singing lessons. I guess I will be. So we just have to be cautious at these points because, as I just said, that 103 is a very, very important point. Okay, and it's got to hold. Now, the good news about it itself is that Bitcoin is holding the trend line. Okay, since 2022, this has been the trend line. So it's testing our metal right now, and it's got to hold this level. Now, if it can do that, it caught the low and caught the 2023 low, and it held the 2024 correction. So right now, it's realigning itself in 2025, and it's potentially getting ready to take off. Now, we got a lot of wood to chop. I'm not saying it's happening tomorrow. I just gave you the points that we got to hold. But, this could potentially be, the moment that we've been waiting for the next rally upward to break the 127 level, 127,000. Now, I want to go over some gold. We talked about gold before ad nauseum. We talked about how I thought that Bitcoin's going to catch a bid from gold. Now, I said that, come on, give it some time. It's not like it's going to happen right away. Now, I want to go over some things about Bitcoin and gold itself, and I want to really go over what we should be looking at. We know that Bitcoin right now is definitely lagging M2, right? It's definitely, and gold is sucking liquidity right now out of the marketplace, and Bitcoin is lagging, but it's still holding the 100,000, okay? So it's behind global liquidity, and it's fiercely behind gold. So we got gold ripping, we got Bitcoin that's kind of consolidating and sleeping right now. But, what do we have to look for? What do we have to look for to basically start to show that Bitcoin's going to start to catch that bid that I've been talking about? All right. And that liquidity always chases risk, right? So the catch up will be brutal. Not catch up. The catch up in the marketplace that will be a brutal rip higher. But the questions that we have to start asking are this, and this is what I've been thinking about. Is okay. Central bank gold purchases have been increasing within this last 6 years. They've been buying gold like crazy, up to 1,000 metric tons a year. Okay, so this is the question that we should be asking ourselves. Are central bank gold purchases increasing, stable, or slowing? The slowing would be the signal for a near-term peak. And if the central bank slow and retail is the one that's still buying, then the top is in for gold. But right now, if you look at central bank purchases, they're basically stable. They're not slowing yet. So the top is not in. Now, are there signals of reserve diversification away from gold or toward other assets like crypto? Yes, you could say that there are. If you look at the states, okay, in the United States, there are certain states that are getting Bitcoin reserves. That's helping Bitcoin. Also, you have other countries also dabbling at. But look, if you look at El Salvador, okay, they're completely in. All right. Now, Scott Bessant actually helped facilitate that, and he's going to do it here in the United States. So that's a good sign. But that's also someplace over the hill in the future. It's not right now. So we can't trade the future. We have to trade what we see right now, right? Is institutional or retail investment in Bitcoin or crypto increasing, decreasing, or shifting right now? Right now, it's shifting. Okay, retail is selling right now, so there is pressure on the coin itself. Are there any type of regulatory or policy moves targeting crypto that could be part of a broader reserve strategy, even if it's indirectly? Yes, there are. The Trump administration loves crypto. There's a we could go through point after point with it, but let's not beat the horse. So we have right now, we are mixed. Okay, so overall, when we get over the hill, and we start to see that, gold purchases by central banks is slowing, yet retail is still buying gold. They're always late to the party. Then we know that the top is in for gold and everything's going to flow back into the crypto market. And it's going to be big. It's going to be massive, massive movements. So, but right now we got to get through the quagmire that we're in. It's a morass, that is for sure. We got Trump tariffs. We got geopolitical news that's really like putting a damper on things. We really, really, it's going to be difficult, but I assure you we're going to get through it. That's why I say join our pro trading group. We'll help you out through it, because we can actually see, if we look at the Bitcoin cycle, the Bitcoin cycle is actually breaking, and we're looking at it right here. It's happening. Okay. We've seen 1064, 364-day rhythm for 3 cycles. But this time, the Fed flipped the script. Remember what they said. They're talking about rate cuts, okay? And we're gonna go into a quantitative easing cycle in the United States. That's going to add more liquidity to M2, right? So monetary easing is back, and that's the real driver. It's not the calendar. Don't look at the calendar. Don't look at the days. Look at what's happening in the background. Now, okay, Tom, look, we're in a bear market right now. We're not in a bear market, guys, yet. Okay? Can we dip down to that 97,500? Yeah. CME gap? Yeah, we could. All right, but I'm not saying you got to watch that 106 level, and you got to watch that 103 on the short term. You got to watch those levels, okay, right here. That will be the catalyst. The 103.5 down break. Yeah, it's opening up some hurt for like longs, okay? But trade this stuff. Like, why do you have to only be long? Why don't you look at the resistance levels we give? You could sell this stuff in our pro group. We sell it. We don't just buy it, okay? We're not just we're not maniacs. I've said it before. We sell, we buy, we sell. We trade it. You're going to have to trade. If you want to make money in this stuff right now, unless you're look, I don't care. I'm long Bitcoin. I put it in my drawer. I'm going to look 5 years from now. Okay, that's fine. That's fine. You'll be okay. You'll absolutely be okay. But people aren't doing that. People are they're playing with leverage. This has become the shiny new object. I remember back in 2009, foreign exchange trading became the shiny new object. Like all of a sudden, there were all these people that were touting you can make millions trading Forex. And Forex is easy. I remember the stupid things people had, the Forex ATM machine, or Forex briefcase. Like these people came up with the most retarded things that you could ever think of, and they were selling Forex because they had no idea what Forex was. They were just, it was the shiny new object on the block, and everybody was going to just, trade foreign exchange, and they lost their shirts. The same thing will happen if you don't understand trading with Bitcoin. You will lose your shirt. You will lose everything, especially if you're over leveraged. So you got to get yourself some education in this. And this is not a shiny object. This is basically trading. It's not easy work. I mean, it's not physical work. It's mental work, but it's not easy. Just don't buy or sell and, okay, everything's great. No, absolutely not. There's a lot of big players in here that want to steal your money. Absolutely want to do it. So that's just the point I'm trying to make. All right, let's talk about what we're seeing. Do we cover this? Okay, went over them too. We went over the cycle. The Fed is going to ease. Let's go on over to Ethereum. All right, Ethereum itself right now. Ethereum trading just under 3,900. It's down 7 to 8% on the week. If we look at this, we got the resistance. We got to get above 4,100. We talked about this. Then we got to get above 4,800. Right now, support sits right at 3,600. Okay? If we come down to the lower level, right there, 3,005. Very important support point. Okay. The liquidation data shows over 130 million wiped out in Ethereum positions alone. The silver lining to it all. DeFi metrics are still stable. L2 activity is quietly ramping back up. So if we could, if Ethereum can hold 3,600, we could see the short-term relief rally. We're thinking Ethereum is going much, much higher. It's holding up pretty well with all this nonsense that's going on. If you really look at it, Ethereum is holding up very, very well. Okay, so if you look at the total crypto market cap, it's roughly 3.6 trillion. Bitcoin dominance, right, is still around 58, 59, right? So we're looking at Ethereum itself. We're saying there's a bullish retest that's still underway. It's still good. Okay, the only way that we lose it is if we get down through this down in here, 3,000. We're losing it. Okay. I would say that right here also, it would be the warning, right? 3,006. That's at 3,006 level is very, very important right now. So if we look at Ethereum versus Bitcoin, okay, this is, and Ethereum, like I said, is holding up pretty well, right? Compared to what's going on with Bitcoin right now. Ethereum versus Bitcoin is loading one of the biggest rotations that we've seen in like 8 years. Okay, the last time the setup appeared, Ethereum exploded 50x. It's happening again, but we got deeper liquidity. We got institutional firepower. And believe me, the big boys are hiding in the background. They are hiding in the background. And this move is going to catch most people off guard. And Ethereum's walking a ladder, man. We said it before. Remember this. We got the bullish retest. Once we get up through 4,800, we're looking at 6,500, a potential retrace, but overall we're seeing Ethereum over $10,000. All right, before that I move on any further and I forget, I want to actually talk to you about how can you get into this private group that I'm alluding to. Well, real simple. The link is in the description of our YouTube channel here. You click this link right there, you're taken over to our Pro Telegram trading community. It's absolutely free to join up. We drop insane alpha trading opportunities daily in there. Get in there. If you're having some troubles, we'll try to help you out as much as we can. If you're into it just by yourself trading, we have 2 brokers, fantastic brokers that we suggest, and they're both offering insane bonuses. We have WeX. Right here, you click that link. You were taken over to WeX, where you can actually get, I believe it's free fees for life. You got also BTCC, another excellent broker that we fully back. They're offering a $500 giveaway for new accounts. That would help, right? So if you really want to level up your trading, check these links out. Hey, if you're interested in Forex trading, I am your chief dealer that navigates you through daily Forex every day. I offer actually trade signals on my YouTube's daily analysis. Incredible trades calls I had there. And also, if you want, you can get into my free boot camp right there if you want to help support this little fledgling channel. All right, let's get back into it. All right, so let's go over to Bitcoin dominance right now. All right. Bitcoin dominance right now is sitting at 59.50. We broke the ascending wedge. We had the retrace back up into it because of all the madness that's happening. So we really need to see Bitcoin dominance get down below, I'm going to say 57.5. We were close. We were close to it, man. And then out of nowhere, surprise, surprise, the marketplace reversed on us. And what can you say, man? That's markets, right? So anyway, if we're looking at Bitcoin dominance and Ethereum, that's what's holding Ethereum down right now. And Altcoins are under pressure because of Bitcoin dominance as well. Altcoins are getting smashed around, man. You got Ethereum, Solana, Avax, all red, right? Barron's reports that crypto complex is at 3-month lows. And we got FX Street bluntly calling it the end of alt season. And now, when you hear something like that, well, you can be sure that it's not the end. It's just hiding, because if you look at the alt season index, it remains near zero. So institutional traders aren't rotating at all yet. Okay. Ethereum's long-term bullish structure still benefits from ETF exposure and layer 2 infrastructure plays, but it's fighting for macro gravity right now. I like that. Macro gravity right now. It's fighting macro gravity. So alt seasons are really starting to enter the decision zone. We got long-term consolidation. Everyone is bored out of their minds. And then we're going to get an explosion. It's going to take a while. You got to watch that Bitcoin dominance. That's the predominant thing right there. And it's given some troubles to the altcoin season. So what's going on? Let's just wrap it up. We got institutional rebalancing. It's not panic selling, okay? This is a controlled rebalancing phase inside a bigger institutional cycle. And we could see that, it's holding the line right now. Bitcoin's holding the line. It's still a relative safe haven, but we might need one more shakeout before the next structural move higher. We might need it. We got M2. We talked about this ad noisem. So we could get that deep down. We could get the break lower. Yeah, we could. Would I have been completely wrong? Yeah, absolutely. Not afraid to say it, but I'm a trader. I didn't stand in front of any freight trains. I'm not always buying like a crazy person. I did think that 108 was going to hold. Now, if that 103 structure holds, as I said, on this chart right here, on this short-term chart, if we can hold this and we can get above 107, 108, we have potential to say that we have a new short-term bottom in place that we can get a recovery from. Then, of course, we got a lot of wood to chop at 112, right? So that's it for today's breakdown. We got the ETF outflows, tariff fears, profit taken, creating short-term noise. But the long game is unchanged as long as we stay above 70,000. Okay, I know we're far away from it, and we keep slipping down towards it. But just stay sharp, stay disciplined, trade the data, not the drama. All right, make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day. And we often, look, we're engaging in some big players, man, are engaging with us, which is really cool. I pointed that out yesterday. So come on over, make sure you're following us. All right. So what do you got to do? Well, you got to trade with your head, not over it. Okay. That's for sure. You got to do that. What else you got to do? You got to think about joining our pro community. What else you got to do? Well, you got to do your own research. As you know, I am not a financial advisor. I'm just a trader like yourself. And also, as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Have a great day, fellas and gals, and stay safe. Trade with your head, not over it. Cheers.